So today we're going to talk about a very interesting topic on dividend dates. Right? So dividends, as you guys know, is a very powerful way of making money from the stock market. Right? A lot of us, we buy stocks of companies like ITC or Power Grid or Coal India so that we can keep getting dividends throughout the year. So the idea behind this video is to explain all the important dates that pertain to the dividends, right? Because what happens is that a lot of people, they buy the stock of a company, but when the dividends are issued, they don't get those dividends. And then they start to wonder, okay, what is going wrong? Why am I not getting the dividends? So that is why it's important to understand these dates so that you get the dividends that you are looking for. And by the way, if you are an absolute beginner and you don't know what dividends are to start with, no need to worry, because we have created a very beautiful video that explains each and every aspect of dividends, and we will attach the link of that video in the description below. So you should definitely go and check it out as well. All right, so now let's demystify these important dividend dates. So there are 4 important dates to remember when it comes to dividends. The first date is called the announcement date or the declaration date. So this is the date when the board of directors of a company, they announce that they are going to distribute the dividends to their shareholders, right? This is the announcement date. The second important date is called the record date. So this is the date when the company checks its record for the list of shareholders who own the shares of the company, right? So they have to distribute these dividends to the shareholders, but which shareholders will get the dividends? So that list of shareholders is basically finalized on this particular date. So in other words, if you want to get dividends from a company, you need to make sure that you have the shares of the company in your demat account by this record date. Otherwise, you will miss getting the dividends. Now, the third date is the most obvious one. This is the payment date. This is the date when the shareholders receive the dividends in their bank account. Okay. So far so good, right? All these 3 dates are very simple to understand. Now, there is one more very important date that we have not talked about yet, but before I explain that, let me explain the impact of dividends on the stock prices, right? So what happens is, let's say a company is issuing dividends. So what is it doing basically? It is sharing its profits with its shareholders. Now, when these profits are given to the shareholders, the money that the company has in its reserves, that goes down. So if their cash balance is basically going down, then the share price of the company should reflect that new reality, right? So let's say, for example, there is a stock which is trading at 100 rupees per share, and the company issues a dividend of 5 rupees per share. So what that means is that once this 5 rupees per share is given out to the shareholders, the share price of the company should go down from 100 rupees to 95 rupees to account for this change. And this adjustment in the stock price happens on a date called the ex-dividend date, right? So this is the date when the stock trades X of dividend. So X means after removing the dividend, right? So in our example, this is a date on which the stock will start trading at 95 rupees, not 100 rupees, 95 rupees. Now the ex-dividend date is usually 1 business day prior to the record date, because if anybody bought the shares of a company before this date, will be eligible for getting the dividends. But let me ask you guys a question which you can answer in the comments below, that what if the company sets the ex-dividend date prior to 1 business day, let's say 3 days prior or 4 days prior or 5 days prior? What do you think can potentially happen if the company gives that much of a time between the ex-dividend date and the record date? So let me know in the comments below. I'm really interested to see whether you guys understood why the ex-dividend date is set the way it is. So guys, this is it. These are the dates. These are the concepts that I wanted to share in this video. I hope you understood how the dividend dates are structured and how you as a shareholder need to act before these dates in order to get the dividends that you need.